Good evening, everyone. It is Sunday night, May 18th, 2025. We could be seeing stocks lose support pretty quickly after the debt downgrade on Friday. We'll talk about that and get into dealer levels as always with our Sunday night video. But first, don't forget to give the video a thumbs up, please, and thank you. I appreciate each and every one of you. Also, we are very proud to announce that we're going to have the full, I know you guys, you've probably seen me teasing this, which we'll talk about it in a minute, but we will have the full terminal that we've been working on for a long time. This will be fully available all together in the trading room each and every day here, and it comes with the trading room. And it's not just gamma. I talk about this all the time. Everybody just obsesses over gamma exposure, but it's really everything else. Kind of putting that together, and that's what we specialize in. One of the things we specialize in here is how to pick out those dealer hedges. But anyway, let's get into it here today. So let's get to the technical picture. Actually, last week, if you recall, I talked about, I said we'd be bullish to about 5,800. Should we, and this is, I said this all, I recorded it last Saturday, so this is before the debt deal, the trade deal got announced, right? And then of course we gapped up, and as soon as I saw us gapping above 5,800, I said, guys, do not get in the way of this. We were looking for possibly maybe like a little bit of a pullback, like Thursday, Friday-ish. We were kind of bullish up to 5,800, then maybe looking for a little bit of a dip, right, into the end of the week, and maybe even a pin to 5,800 by the end of the week. But with that power move here, everybody says like, oh, gaps, it's not healthy. When you gap above moving averages like that and a key resistance level, it's like such a sign of strength. I can't describe. I could do a whole video on it, honestly, but it's very powerful. Now, that said, we're still looking for some sort of a dip here, maybe over the next couple of weeks. Now, is that going to really come off of, it's funny how that just kind of lines up, right? The Moody's downgrade here. And again, we talked about this all week long, specifically on the Qs, really up until like Wednesday. It was very driven by gamma squeezing. I mean, look at some of these stocks like ARC. There was a lot of names that really took off. SMCI, some of these stocks that are just been beaten down. Things that have very deep out of the money put hedges. It's causing that gamma squeeze up into opex. And could we end up, with Moody's coming out, could we end up limiting down or something? I see a lot of talk about that. I mean, it's not impossible. I would say, though, it's not nothing either, because there's a difference between last time when they changed the credit outlook, right? That's a totally different thing than an actual downgrade. And you might say, well, who cares? Everybody knows about, there's financial instruments, like dozens of them, that are based, they have models that are based on credit ratings. And if that all changes at the top, everything has to change. So what does that mean? It could mean we see forced selling, right? So, and that's not something that just is over within an hour and then, it's over with. So that is something that can happen. Again, are we going to crash? Oh, I mean, I don't know. Probably not. We've done a lot of damage here on the bull side, and I'm still in the summer rally camp here. But in the near term, I think obviously ridiculously stretched here. And I mean, could we go down and fill these gaps? Yeah, that'd be great. I mean, that's fine. So that's kind of what we're looking for. But going into the dealer levels here, we're at a bit of I wouldn't say kind of a disadvantage. If we look at, because of the news coming out after hours, and by the way, we closed down, we'll take a look at that in a second, but we basically wiped out the gains on SPY for the whole day and then some, not by a ton, but this is as of the close on Friday, right? So we won't know how much of this open interest and how much of this volume right here rolls into open interest on Monday. And it's also just, you have the 6,000, so I still had a bullish configuration going into that. If we look at SPY, you can see the 600, 595. These are all from Monday's expiry, by the way. We won't know how much of that call rolls in. Obviously, if we gap down, a lot of it's going to change, right? That said, and you can see here on QQQ, where I've got really targeted right now, this 510 right here, okay, that's going to be very important, and 5,900 on SPX is going to be important. If we gap below either of those, I would not try to buy the dip. Need to let it wash itself out. It has been since the 21st here that we had a real open to close red day. And I mean, this does not count. Okay, stop. This is the only, and even then it bounced off the lows by the end of the day, but it's been a long time. It's been a very long time here. And bulls have been getting everything they want here. And even to the point where like, I've been bullish the whole way up. You guys know that. I've been saying like, okay, I actually sold it every day. I closed out last of my like trailer longs. I think it was like Wednesday afternoon. Or it was Tuesday afternoon. It was right up here. And like even by the end of the week, even I was like, okay, like what the hell? Like this is like ridiculous here. So it's been ridiculously lopsided. But that's not a reason for the market to pull back, right? We can get lopsided for a long time, right? And people thought it was lopsided right here, and I told you, people thought it was lopsided right there, right? When we got to go fill this gap now. We gapped up. No, we don't, right? So, that's like famous last words. Oh, we're overbought, right? You know what I'm saying? So that said, if we do lose that 5,900 at any point, I would not, I would not get in the way, at least on a day trading standpoint, at least till 58. So we're probably going to lose another 100 there, and then you got the moving averages right here. Those will be pretty major. You can see actually if you look at the SPY in the after hours, because the futures close at 5. This is the best we got here. You can see essentially this is right where this is, right in this area. It's about 5,900 SPX. Right, so you can see those pivots right there, 59. That's like right in this area. So we closed right on it. So I mean, we're right on it. So if we gap up, that's got to hold. If we gap down, we got to reclaim it. And if we don't, it's going to be problematic down to, probably in that area. I would certainly be watching, like I said, like 510 QQQ. That would be kind of your first major level on the downside should we get down there. And then you can even see, I added up a second ago, but you can see here, I mean like 500. This is for Monday too, by the way. So there's a tail hedge down here. And it's double side. Now Delta is really, positive here, but that can change. So, I mean, that's a long way down for one day too. So keep that in mind. But I would just say here, if we don't hold that 5,900 area on Monday, I would not look to get in the way, at least on a short-term basis here. So right now, we'll see if this ends up being more, being a bigger thing. But my guess is we just did too much damage here to the bear case in the technical picture. You close the week above the 786. It's like not even close on both the Qs and SPX. So now short term still, if we look at NQ, we didn't really do that. I mean, we kind of closed right on it, and we're still into this this trend line here. But I still think there's just too much damage done in the bigger picture. That said, again, we're looking for dips here. I would not get in front of the market if it can't hold 5,900, because that's going to turn, dealer hedges to the downside here. More importantly, the bigger reason is, why did I say support could be lost fast in the title? opex is over, right? So just like I said right here, dealers are not going to support this market if we go down here, and that's exactly what happened. We had a 22% decline in like 5 weeks. I don't think we're going to see that here, but I would not be looking to buy dips right away until the market proves itself. So anyways, guys, I will wrap it up here. Again, you guys take care. Come find me on carnivoretrades.com. I'll see you guys all tomorrow.